Hello everyone watching on YouTube and listening on Spotify. It's another episode of NRG Insights. And for those that don't know, NRG Insights is a podcast that we speak to some of the leaders within the mortgage industry just to get their insights, really, to find out any nuggets of information that they can give to us. And as it suggests, any insights into the market. So today I've got Steve Cox, who is the Chief Commercial Officer at Fleet Mortgages. Thanks for joining me, Steve.
No problem. Thanks for having me, Marcus.
And this is double thank you, Steve, isn't it? Because people won't know us listening to it, but we recorded this already yesterday and I didn't press record. So I really genuinely appreciate your time for a second time.
No problem at all.
Good. I'm really pleased to come back on because we did go through some interesting stuff. But let's talk to me about your financial services journey to how you got to CCO at Fleet, and we'll go from there.
Well, I think like most people, I didn't sort of aspire to go into mortgages when I was at school. So I kind of actually fell into this by accident. So this is way back when. So because I'm old, I remember a lot of entities and companies that some people wouldn't have a clue what I'm talking about. So I was actually an estate agent and sales negotiator in Prudential Property Services way back when. So that's probably late 80s, around 1990, something like that. And they had this magnificent idea where all sales staff in the estate agency chains that they'd bought up would become authorised to also give mortgage advice. And, you know, we can probably say this now with hindsight. The motivation actually was to see what protection could be sold alongside that, and those magnificent products, low cost endowments as well.
Well, which worked out right, didn't they?
Yeah, exactly. And probably, as you know, you can look at it now and say, yeah, there's a fairly significant conflict of interest there, where you've got the estate agent who is literally the same person potentially doing the mortgage advice for both the buyer and the seller. I'm not sure that one would fly.
It's crazy now when you look at. I had a conversation yesterday with someone. We were talking about they were deep in the self-cert business, about 95% self-cert, any CCJs, any defaults, and we were like, what? That was in the 2000s. Going, what could go wrong? You know, you could
exactly.
You flog it on the house, you give them whatever mortgage they want. You know, it seems like an easy market.
So yeah, I kind of fell into that and quite enjoyed that side of it. So I became a mortgage advisor in estate agency, did that for a fair few years, then ended up becoming self-employed on my own. Ultimately that was the natural pathway to take. And then after many years of being involved with that with my own brokerage, ended up working in distribution. So I worked in a Sesame Bank called Group, which is still flying today. So that was more looking after relationships with lenders, providers, etc. And then eventually fell into being a lender. So it wasn't a planned pathway, but I think it's put me in good stead, particularly for the job that I do now. Because I have sat both sides of the fence. I
was going to say that actually. That must have helped your career now, just to be able to actually sit with a broker and really understand what they're going through.
Yeah, it's as I say, my roots were not being a lender, so it's not a kind of pathway lots of people tread where they work in a bank or building society, whatever, and end up involved with intermediaries. So I learned an awful lot. Working on the advice side of the chain, because of course it wasn't just mortgages I was involved in. It was protection, it was GI, it was conveyancing, and everything else that goes with it. So yeah, everything that we now do at Fleet, we genuinely have the broker at the heart of decisions that we make. And I guess at times that the experience I've had of actually doing that job and being on the receiving end of decisions that lenders make in terms of proposition, product, strategy, etc. I have lived through the implications of those decisions, both good and bad.
Good. Good. And obviously, like you say, that's advantageous now, right, to brokers when you can
Yeah.
actually look and go, this
Well,
works or this doesn't work, or it hasn't worked, or
I guess so, because at the time of recording this, I've still got a job.
yeah,
So it's
must be working.
something good in that
Like you
somewhere.
say, this only goes out the next couple of weeks. I hope it's
Yeah.
good. So talk to me about what's talk about the market at the moment with the buy-to-let market. Obviously, you guys are deeply entrenched in that. How's it? You know, we've had so many ups and downs recently. How are you finding it?
Yeah, I think we're probably in a period at the moment where the market is there, the market is ticking along.
Yeah.
I think naturally we're probably in a position at the moment where some landlords will be looking to see what the new government does in the budget, particularly with a view to CGT.
Yeah.
We've also got the Renters' Rights Bill pushing through now as well. So I think some landlords are sitting there looking at it and saying, okay, I need to understand all the moving parts here before I commit further. So market's fine and healthy. We're also, maybe there is a little bit. It's a little bit stagnant, but that's completely understandable with these significant things going on. If we balance that against what does buy to let look like now, in the recent past, and in the future, well, one of the significant issues everyone's faced, particularly over the last couple of years, since the Liz Truss budget that upset everyone in financial services to some degree, we're now back to price points in buy-to-let where affordability is far less of a challenge than it has been over the last 18 months. So,
all these
of
changes,
course,
Steve, realistically, they're not going to put off, if you like, the professional landlord. Now, obviously, it's not an easy cash cow that it was previously when it was like spare a few quid and you buy to let, but it's still a buoyant market, right, in regards to professionals.
yeah, I think so. It's, perhaps professional people, not just professional portfolio landlords, still see property investment as a long-term position. We may have seen some people exit the market both recently and over the last few years. So the original trigger for that would have been the tax changes that we saw a few years ago now. Perhaps as well, some people entered buy to let, I'm going to say almost for the wrong reasons. So a typical scenario would be thinking of a friend of mine who just inherited some money. Said, yeah, I know what I'm going to do. I'm going to do a buy to let. But actually, the motivation was probably more for capital growth as the market carried house prices that way, as opposed to long-term yield. But if we look at buy to let over the last 20 years even, buy to let it's been predicted it's going to die many times.
I can't think of an industry that hasn't been in the mainstream media that's going to die. We were told about 10 times we would die in recruitment.
Yeah.
We're still waiting for that.
So if we look at, there's challenges there, and doubtless there'll be challenges in the future. But if we look at the sort of the underlying macroeconomic backdrop, we don't have a huge social housing policy up and running in the UK. We got about 4.6 million households in the private rental sector. If any government killed the private rental sector, it's as simple as people wouldn't have anywhere to live.
Well, that is the point of this, isn't it? As much as it has to carry on, the industry has. It's not like a want. We need it as a nation, and taking politics out of it completely. The private rental sector is needed. Like I said, we don't have enough houses. Otherwise, it's fairly obvious to me. They have to make changes as well, don't they? Hopefully they will.
Yeah, I mean, changes have to be made, and over the last few years, some strides have been made in that, particularly with landlords that don't behave well. So a lot of the legislation that's kicking around, it's to improve the quality of housing in the private rental,
right? Like you said, but it's most of those things are to get rid of, the slum landlords, etc. There is a big chunk of that market that needs to be looked at, but not the market itself can't be eradicated.
It just wouldn't work. You can't put 4.6 million households on the street and then rehouse them in, overnight. It just doesn't add up in that way. So I think perhaps as well, what the entire industry needs to do better is we actually could do with some positive press about landlords out there. So if you look at the mainstream media, it's and it is all of this stuff is true. Generally, the only mainstream media coverage that you see about landlords is slum landlords and how they're ripping people off.
That's media as a whole, right? Mainstream media doesn't give positive news
Yeah.
because no one's interested in it, and we're all as bad as each other for clicking on it. Because otherwise, they wouldn't tell,
100%. But there's also many stories where landlords, particularly since COVID, whereas market rents have risen, some landlords have, for good tenants, where they've got a good relationship with those tenants looking after their property, they haven't risen the rent in line with what they could achieve because they're happy with the tenant and have got a good relationship with them. So we don't see those kind of stories in the press. Through COVID as well, we know of many landlords that were extremely sympathetic to the plight of tenants that they had. But we haven't seen any coverage there as well. So like everything, there's two sides to every story. But in the mainstream, we're only seeing one side because it's a popular thing to look at disaster.
Yeah, absolutely. Good. So that's we covered the kind of the market there, but I think the promising thing is that it's better, right? I mean, it can get much worse than the truss effect, but it's moving in the right direction.
It is, and the significant point, as I say, for landlords is affordability.
Yeah.
So where all lenders are able to stress the ICR at pay rate on a 5-year fixed. What we always knew from a couple of years ago, us and other lenders were doing a significant amount of business when 5-year fixed rates were give or take 5%.
Yeah.
Then everything blew up, rates rose far more steeply, all the other trigger effects in capital markets that drove pricing up. But we're now back down sub 5% for 5 years. So yes, it's far more expensive than it was. We're unlikely to return to those days. Anytime soon.
We had really cheap money for a decent amount of time, so we have to accept that it was never going to stay like that because.
It was artificially low.
Yeah.
You could argue, but now we're back at rates where the landlords may not like the fact it's gone up from what it was a few years ago, but in the main, affordability works.
Yeah, and this is stable, right? It's not about having the cheapest money in the world or having it going up and down. We just need to see a little bit of stability where people can actually kind of gauge for the future.
Well, I think what we'd all like is, a year or two of, dare I say it, boring BAU without any drama in a fairly predictable environment.
Do you know, I've had that conversation with so many different industry leaders as well. We go, just love a couple of boring years, not boring years, but you know what I mean? Just let us have a run at it for a couple of years with no massive drama in the middle, no wars, no pandemics, no rate rises. But yeah, that's But I mean, name the last time there was that nice period of time. It's just we always seem to be fighting something.
It's very difficult to remember a boring year.
Yeah. Good. So let's go flip on the other side. So what I am interested in, I know we've talked about this before, is your BDM team. You've had them for a long time, haven't you? They've served a long time. How did those guys navigate that time? I will talk about the retention of that team as well, because I think it's really interesting for business owners. But how did you get that team to navigate all those problems with kind of the brokers as well, because they're up against it recently as well, so there's a lot of kind of an education piece and that kind of thing that had to go out. How has that been for your guys and kind of tiered down from the top?
So what we've always tried to do is rather than sell criteria of fleet, we're not afraid to tackle market issues head on and discuss those with brokers. So when things are tough, we don't retrench to, we just need to sell more.
Yeah.
We want to point out always both the opportunities and threats in the market, particularly understanding the challenges and threats that brokers face as well. So the BDMs have strong relationships with the advisors in their patch.
Yeah.
And we always approach it from a point of view of understanding the challenges the broker's facing as well, not just the landlord, ultimately the end customer, but particularly where we see legislation change, or we've seen, in fact, the market shift in buy-to-let.
Yeah.
I see our role educating the brokers, supporting the brokers, dealing with them as well in the way that they need. So perhaps a good example of that would be we continue to see the rise of limited company buy-to-let, where there may be tax advantages for the landlord to do that. We've also seen a shift where landlords are increasingly looking at HMOs and multi-unit blocks because yields are, generally speaking, superior. But of course, we fully acknowledge as well, we are a fairly small part of the mortgage market in totality, and within that, we're fairly specialist. So it's completely natural that busy mortgage advisors, predominantly operating in the mainstream residential sector, wouldn't have that knowledge.
Yeah.
They wouldn't be doing a limited company once a week or even once a month.
And have you found that more? Have you found that more when the resi market sort of hit a bit of a stagnation? Have you found more people kind of jumping on the specialist side of things? Has there had to be more education on your part?
I think that's a natural shift anyway, not just in buy-to-let. So where we've been through a fairly sort of turbulent economic time, that's exactly when customers need mortgage advice more than ever. And it will naturally play into the path of specialist lending, be that on the residential side or the buy-to-let side. So the shift, it has shifted, but I think if we look at the percentages now of business that's done through intermediaries, where I haven't looked at the latest numbers, but we're not far off. 90% of all mortgages in the UK are coming through intermediary.
And that's an education piece as well, right? People know that your bank isn't always the best place for you. People will suddenly realise that your friendly guy in your bank is not necessarily the best person to do mortgage.
Yeah. So our role is to support the advisors with their knowledge, in turn to drive good customer outcomes, whatever the subject. So we happen to be specialising in the complex buy-to-let end of the market, but many lenders that operate in specialist lending try and achieve the same support for brokers.
Good.
So that's good news for intermediaries. I can't touch wood. I can't see that kind of shifting backwards to direct.
I can't go backwards now, can it? Because you just don't get as much vanilla cases now. I don't think, especially like I said, on the specialist side or on buy-to-let or anything, that is not a vanilla case. It's a tough gig, right? Just to go out and do it yourself.
Yeah, exactly. And you could almost argue now that specialist lending is almost the norm.
Vanilla case, exactly. Yeah. Good. Now I want to touch on your leadership and what you've done there at Fleet, because like I said before, you've retained your team really well, and I think it's really important. And I do get these two different trends from kind of leaders as to whether you get out and it's about how many people they're seeing every day, but I know you're not a big fan of that. You're a big fan of empowering your team. So talk to me about your leadership traits that you think have been successful where you are, and what you kind of give to your team in regards to that.
It's definitely empowering people to make the right decisions. So specifically talking about the BDM regions. So it's a pretty standard setup we have. So we have field BDMs that are twinned up with telephone support, and then additional telephone support to handle sort of case chasing, etc., etc. In essence, we look at it from the point of view of saying, okay, so if you are, Southeast region, you guys are Team Southeast. Yeah. So we have targets and objectives and firms we'd like to do more with, some firms that haven't dealt with Fleet before, etc., etc. So these kind of objectives write themselves, but I believe in empowering people. So how they get from A to B and achieve all that we leave it with guidance, oversight, and support to those teams to work out the best way to get there. It's kind of like, in a very strange way, it's kind of like running your own business in that region.
You find that helpful
So
with your guys, like I said, because as we always find with the great BDM migration, it is a money-driven business, so you do tend to lose people. It's quite common, and I know you don't lose a lot. So I think that's a really important thing. And actually, if you look at the reasons why people stay at jobs, empowerment is one of the top three.
and as I say, I'm particularly in specialist lending, the X appointments per day or per week. My opinion is that doesn't produce good results. I also would acknowledge, if we're talking about the high street banks,
it's difficult to not follow that sort of KPI.
advisors that's a different question. But for specialist lending as well, we're also conscious that advisors are very, very busy people. There's 60, 70 lenders or whatever it is active, plus then protection firms that all want a slice of their time, and GI and all the peripheral products that go with it. So if you attack that in the wrong way, you're actually not going to build a good relationship, because these guys are busy. We will always engage with any advisor, big or small, in the way they choose. So that's individual choice. Some advisors want regular face-to-face catch-ups. Some would operate in the complete reverse. It's almost, don't call us, we'll call you.
Is that the concerning thing, though, about the out of sight, out of mind type thing with specialists? Because it's not like it's not Doris's Resi where it's got to be the cheapest deal. There's so many other factors with it. Is there that element of like the fear of missing out? Because I understand the guys that hammer, you've got to speak to everyone this many times, and but I also understand the way you do it as well. But I suppose there's no, if it works.
No, I don't think there's right or wrong. But what we'll always do, so we put a lot of our resources, both people and financial, we put it into face-to-face events. Okay, be that big or small, from big trade events or national conferences for clubs or networks, down to smaller regional events. So our objective at those is not to pitch fleet. It's to talk about the market, to support advisors with their knowledge. The follow-up from that may well result in either a telephone BDM talking through criteria on the phone, or a field BDM going in to see a firm with a bunch of advisors, and just having a discussion about what can we do to support that market, which is a criteria thing. I do sort of still follow this as a rule. So when we do presentations to big or small audiences, I'm not a fan of the criteria pitch.
Right.
So having sat as a delegate myself, it's so dull and boring in my opinion. But anyway, that's just me. Because people control that information from a website in seconds. That's not adding value.
I've similar when we go to shows and stuff, like I think that the easiest thing to do is just try to nail people with recruitment, and actually kind of to be an authority, what you have to do is give people advice on how they should recruit and what's the best thing for retention and that kind of thing. And hopefully when they're ready for you, that's when you can go into stuff with a bit more detail as to how you can help them. But just banging the door all the time is a tough sales technique. But people still do it, right?
People do, to a degree. I hope they do, because it makes us look better.
So, how do you see the market going into 2025?
Well, I think, as I say, we're in the market's fine, but perhaps it's not taken off in quite the same way a lot of people anticipated after the summer and the first interest rate cut. I think, particularly for buy-to-let, people will want to see what happens at the budget. But then the direction of travel in interest rates is down. That only injects positivity into all markets. So I think we're kind of in a period at the moment of transition. Markets always then recalibrate, and the new normal prevails. which, putting that in simple terms, is people, be that customers, brokers, and everyone else in the chain, just get on with it.
Yeah.
So there's always challenges in every market, whether that's residential, buy-to-let, or anything else. But our industry as a whole is remarkably resilient,
Yeah.
and that's been proven time and time again. Markets adjust. So I think the mere fact that the kind of fear of interest rates keep on rising, that has gone away.
Yeah.
We're not going to see interest rates plummet, but at the same time, anything with a direction of travel of down just injects positivity.
Especially for me, my fixed rate's up soon, so there's a couple of downs before before November.
Yeah.
But we shall see. On the other side, I know I'm kind of flipping between things, but we were talking about
Okay.
trade shows and being in front of your brokers and stuff, and I've had these conversations with other people. Is it more important to get out in front of absolutely everyone, say trade show stuff, or do you get more business from, 5 or 6 people on a golf course, or having a slightly closer knit conversation with a group? Where do you think, like, I don't know, budget wise, where it goes, but what's best for you as a business? Because I love the smaller stuff, but I know you need to do the
So my view is it's a mixture of all of the above.
yeah.
Doing bigger shows on stage in front of 300-400 advisors, whatever, that is positive, particularly as we're generally delivering educational content or stuff about the marketplace.
Yeah.
But it's not particularly personal. So if it was a big event, with stage presentations and a stand, even with 2 BDMs or 3 BDMs there's only so many people you're going to chat to, and you're not going to have meaningful conversations.
Well, you're one of very many at the trade show, aren't you?
Absolutely.
Yeah.
So but what it does do is put us on the map from an advisor's point of view. The trick then is it's all in the follow-up. To try and engage with the audience, so that then we're having follow-up conversations. So, it's a conversation a lot of people have about, was that a good event? Yeah. Some people may grade it as a good or bad event purely on the number of people that were in the room. We don't do that.
No.
We grade it as what kind of conversation have we had. So it could be a smaller regional gathering with 10 advisors, but it could actually be more valuable than being on stage in front of 500.
Yeah.
Yeah.
It's very difficult to judge ROI as well, isn't it, when it comes to like marketing, trade shows? Because you don't know where people found you first.
Yeah, and you could attempt to track it through. I'm not sure it would actually change.
Because there's so many touch points, isn't there? It's difficult to know. If you said to someone, "How did you find out about us?" It's one of 8 things, and then actually the one little bit of email marketing might have been the trigger to call you, but it would be a conversation you had, at horse racing or whatever it was. It's difficult to gauge.
No, you're right, and it could be in some instances. I'm sure they may have come across Fleet for the first time at a big conference, but actually then spoke to nobody. Yeah. It could be then an outbound call from a telephone BDM that then leads to a face-to-face meeting with a field BDM, which could lead to a round of golf or whatever, and then all of a sudden, through all of the above, you're starting to build a good business relationship.
Yeah. Good. And are you conscious of that that kind of journey, or is it quite organic because people kind of join the journey at different times? You know what I mean? Like they might give you business from a trade show. It might be a bit more. Is it a fairly steady journey with brokers?
I'm very relaxed about it because I believe all of the above adds value to that relationship. As long as you end up with a good relationship with our broker customers, how they got there in the first place, I'm not hung up on. But I think it's then, how do you then preserve that understanding between a lender and an intermediary? Both where market shifts, on occasion lender criteria shifts for whatever reason, and of course for the intermediary, their businesses shift as well. So we could meet an advisor that may work for a corporate entity that then goes self-employed on their own, that then builds a business.
Yeah.
So without knowing those people, it is almost know your customer.
Yeah.
From a lender's point of view, translated into the intermediary environment.
And then it's people, right? Then it's the retention of them, the retention of your brokers, making sure they're
100%. It's how we maintain that relationship as their businesses shift and adapt.
Yeah.
So we've actually got some stuff happening this week where, without naming them, it's an advisor that was on their own that we dealt with for a couple of years, that's now grown to have 10 advisors.
Amazing.
So then we go into a team meeting, and then yes, there'll probably be, a couple of drinks and a curry or whatever after. But the point is, we wouldn't be invited to go and support that unless we'd supported that individual on their journey.
Nice. And as I've been flip-flopping my way through it, I'll flip-flop back to leadership. So tell me, I mean, you've been in the game a long time. You've seen people come and go. So what would you say? I know we talked about empowering your teams, but what else can you think of that you think makes good leaders, that people want to stay working for them and want to kind of be part of that team? Because it's not. There must be a magic to it, because some people struggle with it.
I think it's always be as transparent as possible with people.
Yeah.
Whether the environment is good or bad. So that COVID was not a great time for anyone in any industry, come to that. But we were always, without spooking people, open and honest about where the situation was at any given time. I think people always appreciate that. Yeah. There's certain lines that can't be crossed. So, for example, when Fleet was sold to Starling Bank, that's obviously information I could not share.
No. Is that tricky? Is that a tough time? Because obviously you're in the league, right? But, and people must be aware that...
No, I think, the closer you get to any deal, there's a little bit of chatter, which is inevitable. All I could say is there's just good news coming. You're going to have to trust me.
Yeah.
So I think, as if you're leading a team of people, if you're transparent, that builds trust. Equally, I trust them, they trust me.
Yeah.
And all the guys that manage those teams directly as well. And therefore, if you've got that kind of trust in a working relationship, that's appreciated, whether something good or bad happens.
Let's talk about that, actually, Steve. That's all right. Let's talk about the takeover, because you went from working for someone, it was Bob, wasn't it? It was you working for him, and then obviously it goes into working for a big corporate entity. I mean, how was the shift, and how's that been for you as a business and you personally? I mean, how's that gone? Because obviously there are inevitably going to be some changes working with that large corporation. But how's it been?
So I can genuinely say it's over 3 years now since Starling acquired the business. It's been nothing but positive. So there's probably a number of reasons to say that. Is Starling always said they bought Fleet because it was good at what it did, not because there was an intention to dismantle it and swallow it into something else that already exists.
That is the fear that people have, isn't it, when they get bought, because they're them two of everything. It's always
so
fear with him.
So if we go back sort of 3 years or so to July 21. The entire headcount at that point was probably around 100, something like that. As we sit today, we're just shy of 200. So in between that, we've grown lending, we've grown market share with Starling's support.
Good.
Of course, they are a fully regulated bank. Therefore, there is some governance that's now necessary. But is that interference in Fleet being Fleet? Absolutely not.
So you still kept the core of your small business. You still kept kind of the value, because I suppose when you buy a business, they've got their kind of values and their core, what they stick to, and I suppose they look for businesses as close as possible to them. But there's still going to be some kind of crossover, if you like. But has that been pretty seamless then?
Well, it has, and we did a rebrand earlier this year.
Yeah.
Part of that was to then dust off Fleet's original values, and it was remarkable that then when you look at the Starling core values, line them up with Fleet, they were pretty much the same.
Yeah.
By a total accident.
Yeah.
Yeah.
But I suppose that's what you look for when you're buying it, when you're purchasing the business.
Yeah.
You're attracted to those businesses because of the core values, I suppose.
Yeah. I guess so. So that's been an extremely pleasant journey for all concerned on that particular subject. So in the sort of harder financial implications of doing it, going from old Fleet, if you like, trading entirely in capital markets and securitized markets, through to a funding model which effectively is retail off balance sheet. That also has given us the capability to price perhaps a shade more competitively than we were able to do so before. And certainly where swap rates at times have been all over the place, and particularly in the last couple of years, it's given us the comfort and surety that even if it was hard work at times, and it has been for everyone,
of course,
advisors and everyone concerned in the loop, that there was always the kind of surety that it's like Starling are in this for the long term. That's why they bought us. So at times it's been very, very challenging, particularly in the last couple of years. But we always knew we'd make it through the other side.
Yeah, I suppose it's a nice security side of things, isn't it? If you got that.
Absolutely.
Good. And in regards to the, we already talked about the market. That's why I keep flipping over. So after Starling, but did Starling buy you after COVID, or was that during?
Well,
Did you go through
I
a quite
think
tricky period with them? Because obviously you went through the change and then the bus effects and everything.
I think it depends on what you define the running order of COVID was. So the acquisition completed in July 21.
Yeah.
Obviously, there were conversations for months before
Of course,
then.
yeah.
So it was during COVID. So we did the majority of these conversations were over Teams and Zoom. And I do remember
because you're trying to sell a product that everyone sat at home. Like that must have been an interesting time.
So I do remember my old boss Bob Young. He when it was sort of looking like this had legs to get to a conclusion.
Yeah.
He contacted Anne Bowden, who's the founder and CEO of Starling, and said, "Do you know what? We should meet for lunch," which was allowed at whatever point in the cycle it was, because they'd never actually met.
Shook hands. That's great.
Never shook hands. So that was it. Pretty much was during a COVID environment. All that happened.
Good. So I'll leave you with this thing, because I said it'll be half an hour, and as always, I've always go over.
Yep.
But if you can give any advice to anyone who's kind of looking to get into the lending market, maybe particularly brokers, we do speak to a lot of brokers that want to move over. What do you think people are looking for, or what are the best traits to have when to be successful in this market? I know that's quite vague, but what would you say? We went through kind of empowering people as leaders, but generally as people, what do you think is the importance for longevity in financial services?
Despite there are some threats from AI, technology, etc., to the advice model. However, we still live in a world where financial services, more or less as a whole, is a people business.
Yeah.
Therefore, relationships are key, whether that's between a broker and an end customer, or broker and a lender, or colleagues. So always treat people in the way you'd expect to be treated. Be transparent. Never, ever be afraid to ask for help, or sit in a room and say, "I don't understand that." Because people, it makes life so much easier. Because this financial services environment is remarkable in the way that all stakeholders come together for the greater good. And that hasn't changed ever since I sort of fell into it. And it's always, and this is something actually at times I do have had to say to my guys, in that being successful in any job is very important to people, both as individuals and financially. However, you got to get it into context, as in we don't deal with life or death. We don't. and therefore, if it is a difficult conversation, perhaps it's a no to an advisor because something's gone wrong on a case. Yeah, remember, it isn't. It is business,
Yeah.
and
Business.
attack a no in the same way that you'd attack a yes. So if it's bad news, deliver it. Deliver it honestly,
Yeah.
and people appreciate that.
It's
Being
still a
upfront.
people. I know you said about AI then, but it's still a people market. Isn't it?
It is.
And I know people buy
It
people
is.
as a cheesy thing that I end up saying on every podcast, but it's so true because everyone I speak to who's been in it a long time understands the importance of actually,
Well,
being a good person and actually doing the right thing by people.
I mean, I think if we look at it from comparison sites moving into the same conversation about AI, if it was true that customers didn't want advice from people, we wouldn't be sitting at the cusp of 90% of the intermediated market coming through. 90% of the entire market coming through intermediaries.
It's crazy isn't it,
That
that people
number,
have so much more access now to the market through, but it's actually bringing more people to brokers because they're realising
well,
how convoluted the market is.
yeah, I can see some benefits to this in terms of efficiency. So perhaps things like standard remortgages or dare I say it, product transfers. I can see AI. Some customers will self-serve. However, when we then get to the action areas where it is, a house move, house purchase, or specialist lending where it's complex, even if people have done their own research, I'm pretty confident that I want this 2-year fix that I found through whatever method. They still want an expert to say, actually, you're right, and I'll do all that for you.
Yeah, absolutely.
So I'm sure it will change.
So we're in a
I'm sure
job for a little bit longer. Good.
yeah, hopefully.
Amazing. Thank you, Steve. I really appreciate your time today.
No
Now, if anyone
worries.
wants to get hold of you or anyone in your team, obviously all your socials will be on our socials when we put this out, but what's the best way to get hold of you?
Yeah, I mean, numbers and email are on our website, and all our field team and the sales management structure in there as well.
Amazing. Thank you very
So
much.
always reach out.
Thank you. And genuinely, I appreciate it. It's always interesting to hear people's insights into the market and the buy-to-let side, especially where the way it's been going the last couple of years. It's always good to hear about it. But thank you for your time today, Steve. Thank you, everyone listening on Spotify and watching on YouTube. And if you forgot what streams they're on. And thank you again, Steve. I really appreciate your time. I'll speak to you soon.
No problem at all. Thanks for having me.
Cheers.